2, 1.
Well, hello, everybody. And so comes to a close yet another week of trading. How are you, Jill?
I am doing well. Always my favorite time of the week, Michael.
Yes, we're back here. We also have the competition overview and market recap. As always, I'm joined here with Jill Malandrino, global markets reporter from Nasdaq. And of course, me, Michael DeGioia, educator, institutional sales here at Dash Trader, telling you a little bit about what's going on in the markets this past week and what to expect in the week ahead. So far, we've still had no stimulus, right? The stimulus battle continues in Congress. Any thoughts on if we're going to get stimulus in the first quarter? Because all the banks are pretty much turning negative now for the first quarter if there's no stimulus, and it doesn't look like there's any on the horizon. What are your thoughts?
You know what? It's really not that much of a surprise to me. I didn't think that we're going to get anything going through. I mean, the administration doesn't have an immediate need. It's not like they're campaigning at this point, and they're certainly not going to be helpful when it comes to the transition. So I wasn't expecting much there, and I don't think that we'll see any clarity around it until that transition has been made, which is just 5 weeks, 6 weeks away at this point. Yeah. So I you know, it's unfortunate for the people that need it because, Mike, as you and I always talk about, for those of us like you and I who are fortunate enough where our jobs aren't dependent on the service industry, we can work from anywhere, we have the technology to do so, we're not feeling it like, half of the other country is. So that's where it's painful and that's where it's hard because it's something that we just can't, we're not dealing with it, but it has to be dealt with. So I just think it's not going to happen until the transition goes through.
Yeah, you know what, the one strange thing that I had not realized until probably about a week ago when I ran into a friend is that, restaurants have been utterly obliterated, at least in the New York State and New York City area. And I didn't realize that many of the restaurant owners were doing okay because of the takeout orders. But I didn't realize that many of the people, the staff, the waiters, the waitresses, the bartenders, because there's not much dine in, especially in New York City, that it's those the people that work the restaurants, which are really, really at wit's end. I ran into a friend of mine who used to work at an Italian restaurant here in Queens and Long Island. And he was like, I go to work and there's nobody there. So, and you don't make your money from tips. So he's like, I'm not even getting, stimulus. I'm not even getting unemployment because I'm showing up to work. I'm just not making any money. So it's kind of a crazy situation for a lot of folks, and they're really at wit's end. It's a very, very stressful time of year. So there's no Christmas for at least my old friend Guarino. So out there, Guarino, thank you for pointing that out to me. Disney has gone digital. I mean, Disney had a whole slew of announcements. And is Disney going to be the next tech giant? What are your thoughts on all the announcements from Disney? I mean, the chart's amazing.
Yeah, it really is quite incredible. And it just goes to show, regardless of what sector you're in, technology has to be a part of that process. Especially, I remember when Netflix first transitioned from being the DVD company to what it is now. And that's kind of where the catchphrase came on. Content is king. Everybody is deriving original content and you just have to be in that game. And I think just, with all the other industries that we've had to see through COVID-19, they had to pivot and figure out ways to make money. So again, I think it's going to be interesting. I believe it was AT&T that made this announcement. They were blockbusters next year in theater and also via streaming service. So things are going to change across the board for the movie companies, for production companies, and that's just the way things are going to evolve.
Yep, no, it certainly seems that way. So I'm very interested to hear your thoughts about this interesting. The election battle royale seems to be coming to a head in the Supreme Court of the United States. It looks to me like this is being brought by a case that's coming from Texas, saying that voters have been disenfranchised, that voters of Texas have been disenfranchised by other states not having good election policies and whatnot. Your thoughts on this as it relates to the markets and as it relates to, the financial world as we see it. What are your thoughts with this coming to ed? Because it doesn't seem, I mean, the safe harbor, December 8th came and went, and it didn't seem to matter. At least for some of us, it didn't matter. So what are your thoughts on what's going on with this continued election battle royale?
Honestly, I don't even really understand what's going on and what Texas is trying to do. I think the bigger picture is that that we're openly questioning our democratic process and our values is really what the key question is. The market seemed to have largely shrugged it off.
Yeah,
like I mentioned to you,
that way.
It was a very bizarre week. And for the benefit of the audience, I actually worked Asia Pacific hours this entire week because I was covering the Singapore Fintech Festival. So there are parts of the day that I was not paying attention to the U.S. market because I have to get some sleep somewhere. But it felt like with the exception of, a couple of headlining IPOs and the continued activity in the SPAC market, it didn't feel like anything really happened this week. It feels like the markets have largely shrugged this off.
Yeah, I mean, I couldn't see what effect at all. I mean, so far it's like the Wall Street has completely disconnected itself from anything to do with politics and policy. Right. Except for the stimulus. I mean, the stimulus, if the government is giving out free money to anybody, Wall Street wants a part of that. But I mean, to me, it just seemed like it's a completely non-issue as far as the financial markets are concerned at this point. Now, that brings me to the next, which I believe is something that's not going to be going away. We all watched those hearings in Congress. With Mark Zuckerberg and et al., all the tech giant CEOs. And I think that it was, from my perspective, it was kind of eye-opening just to see how much power or how much they didn't know about what was going on at the different firms. So this week, finally, Facebook comes under antitrust investigation. I believe it's by 47 attorney generals. Bringing a case against Facebook. I mean, to me, I think it's, obviously some kind of regulation of these firms and their business model is called for. It's not a surprise at all. The question is why, to me, I think Google has kind of they've already started to be investigated, but I don't know what exactly has come of that. What are your thoughts on what I believe is probably going to be, a wave? It's not just going to end with Facebook. It's going to go Facebook, Twitter, Google, probably more. What are your thoughts about this ongoing antitrust investigation of Facebook?
Yeah, I would agree with you. It's something that's not going to go away quick, and it'll probably at least, be decided in the courts. And it takes years for something on this, the size, the scale. For any decision to be rendered. I do think that it is an issue for Facebook, and it will trickle down to the other larger tech companies because they have bipartisan support on this. So it's not like it's a political play. It's something that both sides are supporting. And I think what it is when it comes to technology regulation and legislation, and the same thing could be, if you want to talk about digital assets, the technology evolves way quicker than the lawmakers can, right? So I just think all this technology is coming out. The businesses are building and scaling quicker than the law can keep up. So, this is part of that process to kind of get that caught up, but it will be in the courts for quite some time, like everything else is. But, I think this is why it just shows you why technology legislation, you have to be proactive and in front of the game because it moves way quicker than the law can.
And I don't know what the exact section is because I just started hearing about it this week, but it's section something. It's like where Google, Facebook, Twitter, Google because of YouTube, I guess, but certainly Twitter and Facebook are becoming editors, and that they are in some way editing and therefore no longer protected by section 130 or something like that. What is that all about? I don't know, maybe if you're more aware of it than I am. There's some section that says that they are no longer protected by user created content, that they can't just say that they are not. Right. Well, I don't know all the details of it. That's something that you're aware of, because I believe that probably will put a dark cloud over all of the tech giants that say their content is just user created and they're not serving as an editor in such a way.
Yeah. I think, I don't have a legal background. I can't speak to it that in depth, but I think that's really what the issue is that, how much responsibility do these tech companies ultimately take? And should they be responsible for users' words and so forth? So it's an interesting debate because the thing is, well, I can't be responsible for what you do, but if I'm providing you the platform, then there has to be some sort of responsibility somewhere. And I think that's what they need to figure out what those gray areas are. And it's a tricky thing, Mike. Like, for example, we use our Nasdaq Zoom account to do this weekly, right?
Yeah.
What if I'm not here one week and then you go and you run with the platform that I've provided and, it's Girls Gone Wild or something crazy like that? Am I responsible for that because of content you put out? Who knows, right? Who's responsible for that? So I think about that on a bigger scale with these platforms serving billions of people.
Yeah, it's certainly an issue. I just think that this is the start of a cloud that will probably hang over big tech and user created content for the next year or 2 years, because things that have anything to do with the government and court cases usually take a year or two. So I mean, every single time Facebook, if it does start getting traction, it'll break out and then fail because some new piece of news related to this case. It's just from a chart perspective, I think that the bull run is done for the moment. It's going to be a couple of years of slowed down activity. Just from me thinking about this and my experience of how things have gone out in the past. So let's talk a little bit about the markets. I mean, certainly what we had talked about in being that that the Nasdaq had kind of broken out to all-time new highs. We put in a red week this week. It was a flattish red week. It was not a big down week. It was kind of a red week after 2 green up weeks after making a new high. So certainly not bearish yet. Okay. Certainly we are at the point where we made this ascending wedge. We attempted to break out. Very much like we had mentioned in the newsletter, it might be a failed breakout. Most breakouts do fail. Probably the most healthy thing the market could do right now is consolidate and digest this ginormous move that it's made. But that's pretty much what the charts are telling us, is that it's probably in a digestive phase. The S&P is looking a little bit healthier than the Nasdaq, and that makes a lot of sense, being is that a lot of the tech giants are facing this kind of dark cloud cover, meaning that there's impending additional bad news. We don't know exactly what it is, but anytime the government starts to delve its head and to bring cases, that kind of continues to stay with us for a while. Certainly, the S&P has a large percentage of the tech giants that make up their capitalization, but they also have a lot of other stocks that make it a little bit more of a diverse index. The industrial heavy Dow 30 is certainly looking very good. It stayed up. It had a better overall performance this week than the Nasdaq and the S&P, but that's after many weeks and months of not performing as well. Gold certainly rebounded off of the 165, 166 level, which we had mentioned also in the DAS newsletter, which we said that this was a very key area of support. We've kind of moved off of these levels. I'm just going to draw this real quick. So we said that this was kind of a support level here in this kind of descending flag pattern. And we've kind of moved back up to the top of that range. Now, the question is whether we kind of make a higher low and then continue up, which is traditionally what happens with gold. Gold usually is bought up. We have all kinds of jewelry being purchased around the Christmas holidays. And then you have natural demand at this time of year, as well as you have the Chinese New Year, as well as some celebrations in India going into February. So you have a lot of natural demand going in from December to February. So certainly that bodes well for gold. And then, of course, we kind of can't continue. We've kind of added the Bitcoin and its Bitcoin tracking stock, GBTC, to the regular litany of stocks and indexes and ETFs that we go over. And I know you were dealing a lot with cryptocurrencies and digital assets this week. So why don't you bring us up to speed a little bit about what's going on with Bitcoin and Ethereum and the whole DeFi fintech revolution there?
Yeah, well, the short answer is it's not going anywhere and it's only going to continue to grow. So, a little bit of background on the Singapore Fintech Festival, which I typically cover on the ground in Singapore. Of course, this year it's different. So, we provided around the sun coverage. Over 60,000 people attend this in person as of last year. The numbers, of course, went up this year because we're able to do it virtually. Some key speakers there included Adena Freeman, who is the CEO of Nasdaq, Satya Nadella, CEO of Microsoft, Bill and Melinda Gates speak. I mean, heads of state, the top tier of CEOs and fintech companies are represented. Last year, Christine Lagarde was there. The Prime Minister of India was there. So the New Zealand delegate actually stayed in my hotel a couple of years ago. So this is the level of people that are coming because a lot of companies, a lot of governments are also adopting blockchain and technology within their platforms as well. So it's usually 3 days of media. This year it was 5 days because of Around the Sun coverage. So we recorded APAC at night and then streamed it out New York time to provide US coverage. But with the 5 days of coverage, each day had a theme. And one day was markets, one day was around ESG, sustainability, diversity and inclusion. And then they had a day that was dedicated to blockchain, fintech, and cryptocurrency. It's like a digital asset day. So they each had different themes. I actually hosted one of the keynote fireside chats with the gentleman who heads up the digital asset practice at JP Morgan. So I felt like this was the first time where the conversation was more around the larger financial institutions adopting this, whether it's being grown organically in-house or via acquisition or via partnerships. So the long and the short of it is, when we talk about mass adoption, and it was exciting with Square, it was exciting with PayPal. I spoke with Paxos, who is the technology provider for PayPal and what it's doing with cryptocurrency. It's only growing from here. It is no longer a tool for helping to bank the unbanked or providing access to payments or money transfer or so forth. Like the larger institutions are proactively adopting this as well. So I really don't think it's going anywhere. So when you see that kind of move that Bitcoin has been showing, it's the question is, so Mike, think of it like this: every time we see a massive run in stocks, is it like 1999? Is the tech sector blowing up like it did in 1999? And everyone's like, no, it's different this time. Well, the question is with Bitcoin, is it like 2017? And the answer is undoubtedly no, it's nothing like 2017, because when we saw the run up then, it was primarily driven by retail momentum. This time it's being driven by institutional investment, and we're you could see it in the numbers by who are acquiring and how much they're acquiring with digital assets. So I still think we are in the very beginning, but I will say, each year, whether it's Singapore Fintech Festival or any other conference, it always has a theme, it always has a vibe to it. And this year it was very institutional driven. And I think that is really exciting.
Yeah, no, definitely. There's this kind of fork between Bitcoin and Ethereum, Bitcoin being the kind of store of value, and Ethereum, this whole another array of DeFi coins and different ways to stake and use your coins to earn passive income. It certainly seems like there's a very big fork, and that's using actual digital asset terms, using the word fork. But there's a fork in the direction. There's the Bitcoin-based coins and all the Ethereum-based DeFi coins with their individual specific purpose. And speaking of Ethereum, we've kind of on the ETHE, we kind of came up to that prior shoulder. Certainly hasn't reached the heights of the 2017 high, but certainly has made a huge run up since we started mentioning it here on this show. It's had a tremendous run, and certainly maybe ready to take a little bit of a break. But like any break, after a rest, it kind of resumes and continues its run. Here is the chart of Disney, which had a huge blowout on earnings and then continued to make an ascending triangle or ascending wedge up. And then yesterday's mess of announcements just kind of even further led to the breakaway gap. Here is a company that's completely reinventing itself as theaters are closed and theme parks are reduced in terms of their activity. They've kind of blasted off and had the launching of Disney Plus just at the right time, ready for the next digital wave. And it seems like you said, content is king, as they are launching a whole new bunch of content-driven projects. Facebook certainly putting in 3 lower highs. This is 1 high, 2 high, and you see the lines that I put here on the charts. The support level is certainly, I think Facebook is probably going to be under pressure. The chart is already showing that the stock has been distributing. Every time the stock runs up, it doesn't quite get to its prior high and then sells off. As soon as the bow is ready to break, this baby may fall, and that's just, obviously it's got an impending antitrust suit against it. And even though it is one of the key tech giants, certainly the chart is indicating that the run might be done. 2 IPOs for the moment. IPOs are back. What are your words on Dash and Airbnb? Because I have an interesting perspective, but I'm looking to hear your opinion first.
Yeah, December, and this was an unusual year, of course, because with the election, there was kind of that 1 or 2 week period where it was, it was kind of slow just because of the uncertainty in the marketplace. But December is typically always a mad dash to get the rest of the larger deals done and in the books. So I think, we still have a little bit, we have some more that are coming out. I know next week, and I'm already booked through mid-January, we have a number of higher profile ones that I'll be hosting their virtual first trades with them. So for the IPO team to book me that far out, definitely let you know the activity. That's kind of an inside look into how we do this. There is a lot of activity on the table for it to be that robust, at least for the next 5-6 weeks. So that's exciting. And while I can't comment on the deals specifically, I just thought it was an Airbnb, just the way it priced and where it opened, and kind of petered off a bit during the day yesterday. I haven't looked to see what it did today.
Yeah, but it dropped. It made a large kind of precipitous drop, 2 waves, as you can see here on this chart.
But there definitely is an appetite. I feel like there's still a lot of money out there that people are looking to put to work, and it's not slowing down anytime soon.
Okay, so I have a very different take, and I just want to bring this to people's attention. And certainly I agree with you that there's a lot of appetite for IPOs out there, certainly. But what does it say? So everybody says IPOs, initial public offering. I just wanted to point out that IPOs, they're selling, the owners, the founders of the companies are selling their shares to the public to raise money for their business, but also to create liquidity for themselves, right? So I believe that this kind of wave of IPO activity very often indicates a short-term top to the market. That they're trying to rush in, especially when you see something like Airbnb, originally priced at like $46, coming public in the 140s. That to me is an indication of a very, very frothy market. Everybody's rushing to get. They're all doing the DoorDash to get into the IPO space and get their shares taken to the public market so that they can create a liquidity event for themselves and for them to raise money for their company so that they can continue to expand. So to me, I do think that we're going to see a wave of IPOs in the first quarter, and you'll see that if things do start to turn negative and get sour, that those IPOs will be put off and stalled if the market does start to stall. So I've just been through this a couple of times in the past, and I've seen everybody rushing to do IPOs. And if they don't get them done first, I think that DoorDash and Airbnb certainly caught the best moment for this. The market is still frothy. It's still a big time bull market, and there's an appetite for IPOs and stocks, mainly by these kind of Robinhood retail investors, that they're all looking to jump in on these, and any way they can get shares, they're going to drive the price up. So those are my thoughts, Jill. Do you think I am just being a little bit overly cautious in this, or maybe there's something to what I'm saying here?
There's definitely something to what you're saying there. That's kind of the reward for being there from ground zero, from day one, for all the work that goes with the founding members of the company and the people that were in so early. This is kind of part of that reward, right?
Yes.
So of course they want to price well and take some money off the table in the open market and so forth. The good thing to that is too, there's a lot of companies out there that people wish they were able to make an investment in that don't have the means to do it, with a private transaction, or the liquidity just might not be there. And now you get an opportunity to invest in a company that you've been following. Part of that challenge is too, companies are staying private longer before going public, and that's what jams up the valuation.
Yes.
Right. So, there's a couple things to weigh in here. But the fact that 2020 was expected to be such a challenge, and everyone thought that, capital market formation, whether it's through the private markets, public markets, IPO, SPAC, it was going to be a challenging year. It actually has been a very surprisingly robust year.
Crazy.
We're still seeing new issues, which is fantastic. So there is appetite out there. There's something there for everyone.
I do agree with you on that 2020 certainly turned out to be a great year for the stock market as far as IPOs and SPACs go, and certainly the markets in general. So let's go through the competition overview. We have week one done, December 7th to December 11th. Let's quickly take a look at our ranking analysis. And this is the first time I have ever seen this. We actually have a race for number one. Who is the smallest loser? So we have Best 513, who was only up $68 today, but only down $1,351 in the competition. To me, this tells me that it is a very, very difficult trading environment, and we're going to take a look at some of the stocks, that people were trading, and they all seem to be these stocks that pop and drop. Very volatile price action, in the stocks, and you can see that our winners are actually the smallest losers, with number 5 being down $12,000 and still being in the top 5, which I have not seen this at all during the entire year and an entire year of trading competitions where we've had people trying not to lose. They've always been up in the thousands and thousands of dollars, the main people in the competition. And this year, it seems like last week was a very flat and difficult trading week for our competitors. What are your thoughts on that, Joe?
Yeah, I did not expect it to go this way either. I guess I'm more curious to know what were they trading? How were they trading? Was anything different? Because usually, like the competition, they have the same group of stocks that are prominent. So
yes,
I'd be curious to see like what's different this time around.
Well, I mean, this time around, I mean, I'm just going to quickly go through it. I mean, we do have the Tesla on there. We do have Disney on there. We do have Plug on there. United Airlines always seems to be a popular one. This time is the first time in the trading competition history that we have no MU, and MU did amazing this week. I don't understand it. How do we have no MU and no AMD, and they both were doing fairly well? But maybe that's the reason. Who knows?
It is MU is, and it's funny that because when I went through the presentation prior to getting on, and that was my first reaction too. Like these guys trade MU every day for like the past 52 weeks, and that was the first time we haven't seen.
Yeah, we have no MU this time, and this time we have SNOA, FRSX. HJLI, Kodak, pops in there every now and then, especially since the president mentioned it. And then we have Life. Let's take a look at the charts. And I think that, NEO has been a really popular one. It's also been pulling back a little bit. But here is, this is Sonoma Pharmaceuticals. I mean, what seems to be the difficult part about what happened this last week is that all of the stocks that are on the list are these kind of crazy pops and then drops. And if you look at Sonoma Pharmaceuticals, you can see there's just this massive blast off on this stock that came out of nowhere. And then you got Kodak doing pretty much the same thing. And then they just kind of drift back. And over time, you got Life pop up and then drop. And then you got, Hancock Jaffe rather, blasting off and then doing so it's that kind of blast off pullback without follow through that I think caught a lot of people and probably explains some of the mediocre results in this trading competition. But as we like to say, the competition isn't over until it's over. So we'll see if they can pull it out next week. If we get some better trading situations, maybe next week they'll turn it around. And just to mention, like we always do during the trading competitions, to review your strategy, what's been successful, have you made any trading mistakes, how can you eliminate those mistakes, what have you learned from the trading competition. Keep this in your mind as you wrap up your last week of the trading competition. If you have any additional comments, would like us to cover anything, Jill and I will certainly love to address them next week. I want to obviously just mention to everybody, the competition runs through December 18th. You can certainly follow the results on onebesttrader.com. You can follow us on social media as well with, One Best Trader on Twitter, Facebook, and Instagram. And then, of course, you can follow DAS at DAS Trader TV and all the different social media links on LinkedIn, Twitter, Facebook, and Instagram. And so, Jill, we come to yet another week. You're going to go out, enjoy your last weekend of indoor dining in New York City, as we are now no indoor dining, or are you going to stay in New Jersey and do what you got to do out there?
We are actually doing Christmas with my parents tomorrow. So
okay. So
no indoor dining. We're trying to hit each household in distance and all that good stuff. So
got it. No problem.
Tomorrow. Yeah.
Enjoy your weekend. I know you had a very busy week working Singapore hours. Have a great weekend, everybody. Thank you so much for joining us. See you all next week. Bye-bye, everybody.
Thank you.